This is going to be webinar one of summer session two, and we'll be going over how to discover stocks and short selling, introduction to short selling. Garrett will explain short selling. I'll explain a little bit of discovering stocks. So here, I'll share my screen. All right. So when it comes to discovering stocks, I think a prime example would be a stock that I researched recently, which would be ConocoPhillips. So, I mean, there's like two ways you can go about discovering stocks. One would be reading the news, staying up to date with the news, what materials are in high demand when in terms of if you're trying to research in that kind of field. And like industrials, for example, me and Garrett once researched Bluebird Corporation, but first, let's go over ConocoPhillips. So basically, I'm pretty sure a lot of you have heard about the Willow Project. It was basically a massive oil drilling venture in Alaska. There have been protests to stop it, but I mean, in terms of production, it's a massive scale project that's going to produce about 600 million barrels of oil. And I have a little introduction here as well. Um, and it's like funded by the government, and it's, I mean, it obviously it's a big money kind of project. So when you see such things in the news, you want to, see what companies are involved in it, what companies will have a great share price inside those kind of projects. And ConocoPhillips is a chief company doing all the oil drilling right here. They've created millions of jobs, all these important business aspects. And obviously, you can go through their investor relations, which is what has already been discussed. So that's one. Another one would be Bluebird, which Garrett helped. Garrett pretty much found out. And the thing about Bluebird was that it was supposed to create ESBs, otherwise known as electrical school buses. And so, seeing all these kinds of news about electrical school buses and the shift to electrical vehicles in general, it's pretty important to have electrical school buses. And Bluebird is pretty much at the forefront of that when it comes to school bus manufacturing. And so we looked at that news and we would think, all right, this is pretty captivating, pretty good to research. So that's one. And then the second way to discover stocks would just be to go through a stock screener. If you really want to go to just metrics, not really like news outlets. So, for example, you can go to Finviz, financial visualizations, go to their screener. All right. And pretty much, let's say I gave my team a sector of financials, and they want to have um, dividend yield on their financials, a relatively mid market cap. And then you can pretty much see, like, it's basically just boiling down to whatever like your preferences are in any companies, and it finds out companies for you. So you got all these tickers, you can access it here, but if you don't want to access it here, you can go back to Yahoo Finance and just um, go through that one company. So let's say we have AEG, Aegon Ltd. So right here, um, you have dividend yield. Let's say I really like investing in stocks that have high dividend yield. All right, market cap is mid size, and then we have dividend yield right here. Right. So it's pretty like there's two ways to go about it. Anyway is personally I don't have a problem either way. What my interns would go about it. Although I prefer personally going through actually researching and going to news outlets because it kind of makes it more about you, like how you research it, and like it's more unique to you when you research on your own. But yeah, yeah. All right, Garrett.
Let's see. All right, thank you, Ion. That was good. Let's just move over to this stuff quick. So I'm just gonna go. I did have FinViz open, but Ion did a good job at explaining that, so I don't need to go through that. Let me just hide this really quick. Okay. So now what I wanted to talk about also is that when you're researching stocks, another great website is the White House. They have a White House briefing room if you just go on Google. and you look up the White House briefing room, right? Go here, briefing room, and they post the White House. They're constantly posting information about what events are happening, similar to like the Willow Project. I'm sure it was on here a while ago. Projects are posted, stuff like that. Anything important in the country is posted on here. Some of these, like August, they're very recent. I mean, they upload a lot of stuff every day to these, which is really good. One thing I wanted to show, just more recent, we actually did find stuff from for Bluebird, uh, really a strong like indication that the company was being impacted by government subsidies just from the White House briefing room. And what I found today is that I went to eight. Typically, what you're looking for is fact sheets, and not this one, but down here we have this. White House announces new private sector investments in American maritime industries due to Biden-Harris administration efforts. Okay, so this was very recent, July 29th. What is it, 9 days ago or 10 days ago, whatever. But in the report, we can see where they're putting some of their investments into our American maritime industries. So HT Hyundai is seems like it's going to be impacted by this. Some of these shipyards may also be impacted. I didn't read the full extent of this, but the United looks so just looking here, heavy polar icebreakers for the United States Coast Guard. They have invested over 20 million in private capital in its shipyard. So the Coast Guard has invested $20 million into this company. All right, that's pretty big. I mean, I don't think this company is very big. I've never heard of it. So like stuff like this can be very impactful to these companies. And just looking at the White House is actually a really good resource to find like where government subsidies are going. All right. And then briefly, another thing you can go through is like different banks. They post research once in a while. We have some, let's see. So this was Goldman Sachs research. They have a few of them posted. Uh, Not all of them are directly related to the market, but like stuff like this. Powering up Europe AI data centers and electrification to drive growth in electricity consumption. All right, so what does this mean? What does this mean? It doesn't mean that necessarily that electric like companies or like the manufacturers of renewable electricity are going to make money. It's more targeting towards the growth in the utility sector, right? When we see growth in electricity consumption, we're assuming higher demand for utilities. And you can go for these reports and you can even pull some of the stuff when you're doing your Seeking Alpha research papers. But you can pull some of the stuff from Goldman Sachs. They do a lot of research into these companies. They get a lot of data because they actually go to the company and they grab stuff from them. So you can go for these. You can look at some of these. And anything can help though. Like this is more sector specific. So from here you would say a growth in utilities consumption, and then you would start looking at utilities companies. And that's pretty much what you would do with something from a bank like Goldman Sachs. Um, I'm trying to think of any other things real quick. I guess there's not really anything else. Seeking Alpha has the same thing as the FinViz. They have a screener down here you can use. Uh, some of their screeners are more analyst-like based, but you can do some of your screening on here too. So that's really cool. We won't get to short selling yet. Just a second. We're just gonna go real quick. I just wanted to show you this as well. This is a little analysis I had started on the utility sector. Um, I know I talked to, I believe it was Suez about this too, but I had been started creating my cash flow models for different companies in the sector. And what I was just doing is seeing which companies had the best valuations right now. So any my calculated per share terminal value was 92.77. So this stock is undervalued right now, is what I was assuming. The same thing for this, around $92, undervalued. Duke, a little bit different. My analysis, this thing does not always work when there's high levels of debt, but if I alter this a little bit, I could get a better analysis of that. PCG, I didn't get to. I didn't get to some of these yet. Um, yeah. And that's kind of where I was when analyzing the utility sector. I also identified location. Location is important in a lot of companies, especially you typically want companies in the US just to make it easier. Geopolitical risk or another factor to consider. So investing in the US is just easier. We understand most of the time what's happening in our economy, so you don't have to worry about risks like that. Um, but moving over, so this was my analysis on information technology sector. I was looking for companies that could profit from personal computer replacement cycles. Um, I found this Hewlett. I broke down their revenue. I broke down each company's revenue. I didn't just go right to Hewlett, even though this is what I ended up choosing. But I broke down every company's revenue. I looked at what their revenue from personal and commercial computers was. I looked at the percentages from that, and then from there, I kind of got a better understanding of how these companies are portioned, where they're getting their money from, and how my assumptions that the personal computer industry is going to grow kind of fits into that as well. And that's just kind of wraps up what I did for those. I know that was fast, but just a short summary of that. Um, all right, so just in terms of short selling, I just want to show this video again. I showed it in the first webinar in summer session one, and I think, I don't know if you guys will be able to hear it.
We can't hear it, or at least I can't hear it.
All right, let me see real quick. It's actually a really important video. All right, I think if I do this, tell me,
Just
can you
sell
hear
it
it?
now, and then a year later when it's cheaper, just
Can you hear it, Ian?
short one Apple share. But I
Yeah,
don't.
I can hear
I'd
Okay.
like to short one
All
Apple
right.
share, but
So everyone just pay attention to this video really quick.
I'd like to short one Apple share, but I don't really get how short selling works. Let's pretend your friend gives you an iPhone 11 today and wants it back in a year. Well, what would you do? Well, that's easy. I would just sell it now, and then a year later, when it's cheaper, just buy it again and pocket the difference. Exactly. That's essentially how it works, but with stocks instead. So basically, I'm borrowing a share of Apple today, and then if the price goes down, I just buy one up on the open market, return the borrowed share, and then keep the difference. Got it. I'd like to short one Apple
All
share,
right.
but I don't really.
So I think like so this stuff short selling like personally I did not get it right away. It's not very like simple to understand. Um, there's a lot of like factors to it. I mean, you need margin in the first place. Like if you wanted to short sell, you can't just do it like you buy stocks because the broker has to have trust that you have enough money to cover your position if the stock goes to infinite, which I'll show kind of what happens once the stock takes off in the opposite direction of your short sell. But for short selling, the idea is that you're betting that the stock is going to decrease in value. Okay. When you do your valuations, you may find that stock has a lower forecasted price. And in that case, maybe it's a good time to short sell the company. There's a
Okay, so
lot. Yeah, yeah, yeah.
I just want to clear it out, right? For anyone watching. So if you're gonna going long on a company means, if the stock price increases, you make money. Going short on a company, if the stock price decreases, you make money, right?
Right.
All right.
Okay. So yeah, yeah. From that, we just need to better understand is that like there's a lot of moving parts when you're short selling. I can tell a story real quick. So I know a guy, that had he worked in, I think yeah, he was working in the hedge fund business, and one of his friends had been a short seller, and maybe 2 years after that happened, he would soon become a school teacher. Short selling is very risky. People that short sell do not stay in positions like that for long times. A lot of them fell. They may have to get a different job. They may lose a lot more money than they actually started with, which is crazy to think that um, you can lose more money, be in debt from the stock market, which is absolutely crazy to think. That's why you have to be very careful when you're short selling. You know, not many short sellers succeed, but it is something to consider. Hedge funds, they're short selling, they're buying, and they're also short selling. They're doing both. So we have to consider this too. All right. So I think this is like the best video I found on the internet to like kind of clear that up. But now I'm just gonna go shortly into a steps for short selling. Just bear with me with my handwriting on the console. Let's see. So steps. All right. So the first step when you short sell, as the guy explained, is that you're going to borrow the stock from the broker. Okay. So now that you have borrowed the stock from the broker, you can do this because you have margin. You're not really like borrowing it for a long period of time. Like when you borrow it, you're almost instantly going into the trade. You're not like just like, oh, hey, let me borrow that for a little bit, but you're going right into the trade. So when you borrow the stock from your broker, let's just say the stock is trading at $100. And then immediately, what happens is you are selling the stock to the exchange at $100. Okay, so you borrowed the stock from the broker, so the broker is expecting that at a later date, you're going to give the stock back to him. So when that happens, you're also selling the stock to the exchange at that $100 price. Okay, so now what happens is that let's just make this assumption that 1 year goes by. And now the stock is trading at $80. Okay. So just briefly, so we got borrowed the stock from $100 from your broker, that $100 stock, and then you sold the stock to exchange immediately at $100, and now 1 year goes by, stock is at $80. So what you're going to do is you're going to buy the stock back from the exchange. So you buy the stock back from the exchange at $80, and then now you're going to you're going to give the stock back to your broker because they want it back because you borrowed it from them. Broker. And the stock that you're giving back is only worth $80 now. Okay, so where did you make money on this trade? Okay, so what happened is that when you sold the stock to the exchange at $100, you made $100. Yay. But the broker wants this $100 back in a certain amount of time. So what happens is that during this time, that stock, it went to $80, okay? So now the stock just, or I'm sorry, the broker, they just want the stock back. It doesn't matter what price it is. But now, because of our assumption, because of this trade, the stock is now at $80. So what happens is that you're selling the stock back to the broker at $80. Subtract those two numbers, and in turn, you made $20, right? And that's just kind of simplifies it a little bit more. It is confusing on how you can borrow a stock from a broker. That is a little confusing. That's why they require margin, but that just kind of simplifies it, I think, in the best way. Just shortly, briefly, I wanted to watch this video just one more time after that. I just really want you guys to understand this. It's a very important topic.
Get how short selling works. Let's pretend your friend gives you an iPhone 11 today and wants it back in a year. Well, what would you do? Well, that's easy. I would just sell it now, and then a year later, when it's cheaper, just buy it again and pocket the difference. Exactly. That's essentially how it works, but with stocks instead. So basically, I'm borrowing a share of Apple today, and then if the price goes down, I just buy one up on the open market, return the borrowed share, and then keep the difference. Got it. I'd like to.
All right, so just once more, I'm just happy we did that really quick. But going back to this, so we can see that there are benefits to short selling. When you think that a stock or a company is overvalued, you can profit from this decrease. Now, the problem is, though, is that stocks, all right, so when you buy, like Ian said, when you go long, you buy a stock, right? And the stock can go to infinite. A stock can never go to negative amounts of money. Uh, a stock can't go negative. A stock can never go negative. Okay. Now, the problem is that when you short sell, if a stock decides to go to infinite, so this is a short sell, what happens is that you just keep losing money because a stock, let's say that $100 stock, so it was a $100 right here, and now it's at $1,000. Well, that's not a good trade. You now are in debt. You have $900 that you have to pay back to the broker because you made a faulty trade and because you did not understand the trade and that the stock market does not always work with you. And in turn, you just lost $900 because stocks, they don't stop at a certain price. They can go to any price they want to. There's no limit to how high a stock can go. So that just kind of shows like why short sellers kind of fell. I mean, this happens a lot where a stock just goes up like one day it increases 120%. Well, now the short seller, they're in debt. And that's where it gets really hard. And that's why a lot of people, most of the time, they avoid short selling. But it is something that you have to learn, especially if you want to go into finance. And I think this tutorial did a pretty good job at explaining it.
I would add one more bullet point. Just name the what the risk is called. It's called unlimited losses.
Yeah, yeah, yeah. So like from here, I can add that here. You know, that's probably the most important thing is that a short sell it entails profits when the stock goes down, but when the stock goes back up, you have exposure to unlimited losses. With the long, you have limited losses because a stock can only go to zero. It can't go negative. But when you do the opposite, a stock can go to infinite. There's no cap to how high the stock can go. I think I think that's everything though. There are like there's a lot more steps I can go into. I don't even know like the full like everything about short selling. It's very complicated. And hedge funds use this, a lot of financial institutions use this, but so advanced equities, we we'll be using this in stock report 2. I believe it's on the schedule. I'd have to double check, but for stock report 2, we're planning on asking our interns to short sell and create a report that indicates whether a company would be a good short or not. And from that, I think that's it. We're gonna wrap up the recording right now. So let's do that. And thank you for joining.
We have a question.